Click the bell icon to get latest videos from Ekeeda.
Hello friends, we'll be discussing certain details about the distinction between normal and abnormal laws that we have in the part of consignment. So when we spoke about in the previous video regarding the normal and abnormal loss, we understand that the normal loss is unavoidable loss that happens some or the other times, or rather which is very frequent in nature. On the other hand, when we have abnormal loss, we understand that this is something very rare in situation, or rather rare in nature. This is not something that we would expect out of any consignment to happen. However, if that happens, we have to treat it in a different way as compared to the one that we treat in the form of normal loss. So let's understand what basic distinctions we have, or rather what are the basic differences that we have when it comes to normal and abnormal loss comparison. So we'll be jotting down the points according to the distinction between them, like the nature of two or the expenses of two, or rather when we understand the treatment of both these two terms in terms of accounting consignments, or rather when it comes to consignment accounting. Let us understand with all these details in it. So I'll be jotting down these points here. Make sure you note down these points for your future reference. Now, when we speak about the normal loss or abnormal loss distinction, the first type, or rather the first distinction, refers to the nature of it. Normal loss occurs due to the inherent nature of the goods being shipped. As in, if you're shipping water or rather any chemical from point A to point B, there might be certain leakage that might happen on its way, or rather in transit. If you're sending certain goods which are perishable in nature, you might find certain goods, or rather some of it, being perished away, or rather getting decayed because of its nature. Now, that thing is known as a normal loss. On the other hand, the abnormal loss is related to unforeseen activities. Now, the unforeseen activities can be any kind of accident that might get caused when it is in transit, or it may be of any natural calamity that happened, like when point A, or rather from goods are being transferred from point A to point B, there is a certain earthquake, there is a certain tsunami, and the goods are being taken away or being washed away, or the goods get damaged during that time, or if the transit wagon gets into some kind of accidents, then in such a case there is an abnormal loss here. Now, the next kind of difference that we have for normal and abnormal loss is the accounting of such losses. Now, when it comes to normal loss, we do not account this kind of loss immediately. That means we do not record this kind of loss immediately in the books of accounts, that is profit and loss account. We record them when the unsold goods is supposed to be taken into consideration. Only at that point of time we record such a loss. However, on the other hand, when we understand that it is abnormal loss, we record it when immediately such kind of loss happens, or rather when such kind of incident takes place, like any natural calamity or accident. Right at that point of time we record such transactions here. So let's highlight it in the distinction mentioned here. So for normal loss, we do not record it, just to make sure that what you need to understand under recording the transaction. Normal loss, we don't record it, and for abnormal loss, we do record it on immediate basis in profit and loss account. Now, on the other hand, when we talk about normal loss, it impacts the gross profit part. Now, the question is, how does it impact the gross profit part? The reason being, as this cost, or rather this loss, is taken into consideration when the unsold goods are taken into consideration. So, unsold good is the closing stock, and closing stock is referred to trading account. Hence, it impacts the gross profit here. However, when it comes to abnormal loss, it is recorded in profit and loss account. Hence, it doesn't impact the gross profit at all. Now, on the other hand, no insurance is available for normal loss here. And if you have to talk about insurance cover, that is for abnormal loss, yes, it is available here. So whenever we speak about normal loss or abnormal loss, insurance is never available for normal loss because it is bound to happen. These are certain technical aspects, or rather we can talk about certain small things. But when it comes to abnormal loss, yes, insurance cover is available because this is an unforeseen activity. Now, as you know that this is certain and uncertain, these are the two things that we have to understand. Now, when it comes to normal loss, of course, it is certain in nature. But when it comes to abnormal loss, it is unforeseen, or rather it is uncertain in nature. So these are the basic distinctions that we can speak about when it comes to normal and abnormal loss distinction, or rather differentiation. Let's understand few more details on it, or rather let's understand few more entries that we have to pass whenever it comes to the distinction between these two things, rather abnormal and normal loss. So there are certain entries that you have to pass. The first one would be recording of this transaction. The second one would be recovery of this transaction from either two parties. One is an insurance company. Second is the consignee. Now, when you have to record this specific transaction, let's figure out what is the entry that you have to pass. So when you have to record the abnormal loss, considering loss is an expense, or rather it comes on the debit side. So abnormal loss account debit, and it is on the basis of the consignment account. So consignment account will be credited here. So that is the entry that will be passed. So when it comes to recording, abnormal loss account debit to consignment account. Now, when this same entry is supposed to be recovered, first, if it is recoverable from the insurance company, then whatever abnormal loss that was debited first, to close it, it will be credited, and the person who's paying up the amount, if it is insurance company, then insurance company account will be debited here. So insurance company account debit to abnormal loss will be the entry here if it is payable or if it is getting repaid by the insurance company. Now if the same thing is recoverable from the consignee, if the consignee is at fault, then instead of insurance company, you have to debit the consignee's personal account, and abnormal loss account will be credited because it has to be closed out. Now there is a small note that you have to understand. Whenever it comes to abnormal loss which is not getting recovered at all, that much amount has to be charged to the profit and loss account. So profit and loss account debit side will be that much of amount for which the recovery hasn't happened. It can be a complete recovery that hasn't happened, it can be a partial recovery that hasn't happened. So in such a scenario, profit and loss account will be debited there. So this is what we had to discuss about the distinction between the normal loss and the abnormal loss. So I hope this video gave you clarity about it. So thank you for watching this video. Stay tuned with Ekeeda and keep subscribing to Ekeeda.